Tim Sanders. I'm the founder and the CEO of Credit Repair of Florida, which is a local credit service organization established right here in Central Florida. I help individuals overcome their credit challenges to reach their financial goals. I've been in business for almost 11 years and been able to help over 4,000 people improve their credit situations and be able to achieve things such as purchase homes, purchase automobiles, purchase businesses, and things of the such. And I also help home buying professionals with the clients that have credit challenges, with those clients to help them overcome those credit challenges and reach the closing table. Well, I am a native Floridian. I grew up down in the Vero Beach area, down in a little section called Gifford, Florida. And I'm the youngest of five kids, actually six. I always leave out my stepsister, so I don't want to, I'll be remiss. She'll kill me. But yeah, so grew up amongst mainly boys. It was four of us boys, two girls, and moved up here out of high school, moved up to Central Florida area and to go to college. I'm a UCF Knight, went to school at UCF. Moved around a little bit. After college, I ended up moving to Atlanta. From Atlanta, moved out to California and then back to Florida. I was working corporate world, and in my former life, I was a project manager for a automobile distribution arm of an automobile company. And so I was a project manager, basically helping improve the processes of the departments, eliminating waste, that type of stuff. Along the way, I ran into some financial troubles, ended up going through a bankruptcy, ended up with a foreclosure and a really tough financial situation. Had to pull myself out of that. And as I was doing that, um, I really found out the importance of credit. And once I did that, I sort of went down this rabbit hole to try to understand exactly what it was about and how much that we really don't know how the credit system really works. And so while I did that, I ended up just kind of doing a lot of research, getting connected with a lot of people that worked in the industry. And then from there, I cleaned up my credit, pulled myself, improved my financial situation, was able to do the things that I wanted to, that I needed to do, purchase homes, get financing, purchase vehicles and things like that. And then I started helping out family members and coworkers to improve their situation. And then I thought, I could really be onto something. I think I can help a lot of people. And then I started my business. And so I ended up one day just, the first thing that I did was really just built the business infrastructure. I wanted to make sure that I very thoroughly knew what I was doing because a lot of people really depended on their credit situation. And I knew that I was going to want to make sure that everybody had the same professional experience and that I was able to deliver on the service that I was providing. And so as I did that, I put an ad in a coupon book at one of the convenience stores, and I said, "Hey, if I can just get one phone call to help one person, then that would be my confirmation that I can help a million." So one day I got a phone call. This was while I was still working in the corporate world. Got a phone call after work. I went and took my laptop, went and met this gentleman who found me through the ad. I set up my service, signed him up, and that was my first client. And it's been over 4,000 clients since then that I've been able to help a lot of people. Okay, so if there's a school that you can go to or some type of formal education that you can get to educate yourself in regards to personal credit, there's not a credit education, a formal education that you can find when it comes to personal credit. They don't really teach it in school. You can't go get a degree in personal credit. So you really have to do the research yourself because there's a lot of misinformation out there as well when it comes to personal credit. So for myself, it came down to doing a lot of research, seeking out people who was worked in the industry. And as I did that, I mean, I became familiar, became friends with people that work inside of FICO itself, and also people who have history or background of working inside the credit bureaus themselves. So FICO is a brand of a credit scoring model. So just like Ford is a brand of auto, then FICO would be a brand of a credit scoring model, which most of the banks use in order to score your credit profiles. So it's basically an algorithm, a proprietary algorithm used to really score and to come up with those credit scores that you see. Um, and FICO is not the only brand. There's also VantageScore, and then FICO, and then there's a couple other minor ones. But FICO is the one that mainly the banks and things use, and then Vantage would be the ones that most of the credit, sort of like the credit monitoring services use, like a Credit Karma or a Smart Credit or Identity IQ. So the things that affect a credit score and that really that a credit score that goes into a credit score. So a credit score is basically a snap. It represents a snapshot of a personal credit profile at that particular moment in time. So whatever's reporting on someone's credit report at that moment that they run the credit score is not a static number. It's actually a dynamic number that can fluctuate depending on the time of the month that you pull the credit report, and actually who pulls the credit report, how it's weighted, depending on the algorithm and the credit scoring model that you use to come up with that number. So what it's based on is, and I'll kind of break it down to the sort of like the pie chart that you see, which payment history, which is the biggest impact to a credit score, is your payment history. How you pay your bills is what's going to impact your credit the most. Well, basically, it's what's reported on your credit report. So that could be your mortgage, it could be your auto, could be auto loans, could be credit cards, could be personal loans, could be retail cards. So those are mainly the things that mainly report on your credit report. Typically, things such as your rent payment, things such as utilities, things such as a phone bills, those things don't typically report on their credit report. Now, that being said, there are some third parties that are starting to report those on basically a subscription basis on credit reports. But typically, it's going to be credit cards, autos, retail cards, mortgage, auto loans, and things of that nature. Well, when you're young and just establishing credit, and I have a young son, and I advise them you really want to start with maybe like a secured credit card, right? Because initially you're probably not going to get approved for a credit card if you don't have established credit. So not having established credit is better than having bad credit. But if you don't have established credit, then you're probably going to want to start with a secured credit card and then basically work your way up from there. A secured credit card is a card, like a credit card that you will get from a bank or a credit union, in which you have to secure it with your own funds. For instance, if you say a $500 secured credit card would require that you give the bank or the credit union the $500, and that in turn would be the limit of the credit in which they award you, so that you can use that and pay on it just as if it was a non-secured card, in which a non-secured card would be a card that you don't have to put any money down. It comes already with an amount which has been set or established by a bank that really awards you to use that credit vehicle, that credit card. You can establish credit by being a cosigner, or not necessarily a cosigner, or an authorized user. So someone like a parent or a close relative or something can put you on a card as an authorized user, and then you can in turn use that to build up your credit profile. Now, the one thing that I always tell my clients, because all credit is not the same, you really get the most bang for your buck as a primary user on a card. So it's probably best if you can to get established with a secured card, and that authorized users is not that necessary. So the the way the credit scoring the way the credit scores go, which the lowest score being a 400 and the highest score being either an 850 or a 900, depending on which scoring model. And your FICO, it really ranges from a 450 to an 850, and then with Advantage, it's more from 400 to 900. And let's stick with FICO, which is what most people are familiar with. So 450 being the lowest score, and then your 850 is going to be the highest. And so the best way to build up your credit score is really, it's going to be your payment history. All right. So making your payments on time, that's going to really, really drive your credit score. You really don't ever, if at all possible, you don't want to miss any payments when it comes to your credit accounts. I mean, even missing one payment can drastically negatively impact the credit score. I mean, it can, just one late payment can drop a credit score in excess of 100 points. So you really want to make sure that you're making those payments on time, even if it means if you feel like you're in jeopardy of making a late payment or something to that effect, you probably, reach out to your creditors, have that conversation with them, and see what accommodations they can make, just so that you don't miss that minimum payment and negatively impact your credit score. So when you talk about your credit balances, you really want to keep a low balance when it comes to your credit score. The rule of, and there's a myth out there about having a 30% balance on your credit account is going to improve your credit score. That's not necessarily true. Ideally, you want to keep your credit balances below 10% of the limits. So how you maximize on your credit score using your revolving credit accounts, which a revolving credit account is an account that as you pay it down, then your limits sort of rebound. So as you pay those credit cards down, then your limit goes back up, or your available credit. So you really want to keep it below 10%. That's when you're maximizing on your credit score for those revolving accounts. A lot of people think that by paying those accounts off in full each month, then that's going to have a bigger impact to your credit score, which is not necessarily true. What it's doing is that what it's reflecting when you're keeping those low balances, making those payments on time, is it's showing that you are a disciplined consumer. So it reflects that to the lender, that here's a person that's a disciplined consumer who can manage those credit accounts without running the balances up and having to pay them in full. And the other thing too is that it shows it registers a small balance on those credit accounts, because when you pay them in full, when that account reports to the credit bureaus, then it may be reporting that there's no balance and then there's nothing to report. But when there's a small balance on there, it shows that this is a disciplined consumer and you're making those payments on time and keeping those balances low. Advice that I would give to someone in really maximizing on their credit and building up their credit profile and their credit report, you really want to have a diverse credit profile, right? You don't want it just heavy on credit accounts. You don't want it heavy on loans. You really want a diversified credit profile, which would include some credit cards, maybe some retail store cards, like a gas card or department store card, You throw an automobile on there, and then eventually you throw a mortgage on there, and that sort of that rounds out a credit profile. So a person with a diversified credit profile typically is going to have a higher credit score than someone who has a credit profile that's just heavy on revolving credit accounts or credit cards, or just has what you call loans that, such as just auto loans or personal loans or something like that, which not is going to have an adequate amount of revolving accounts on there as well. So you really want to diversify credit profile. The credit reports really, there's a lot of things that's determined from a credit report. So really things that you don't even think about, such as not only does it affect the interest rate or the money that you're going to pay on money that's loaned to you or money that's borrowed, but there are other things such as, even renting an apartment is going to be based on your credit score, more and more actually. And then things such as, let's say for instance, military clearance is based on, you have to have a solid credit profile in order to get military clearance. Some employers typically look at credit reports now. So, having a bad credit score, credit report can really hinder you from getting that job. And also insurance, when you go to get different types of insurance, auto insurance in particular, that could be based on your credit profile as well. So, so there's quite a few things are based on your credit profile. So the problems that we solve at Credit Repair Florida is mainly the majority of our clients are people who are looking to purchase homes. Usually first-time home buyers come to us and they've been rejected or denied because of their credit. And so what we do a free consultation. We do a forensic review of their credit reports, looking for any type of anything that we can basically do to leverage to get them to improve their credit or to help them improve their credit, or to identify things on their credit report that could be hurting them that they may not realize. The one thing about credit as well, it's easy to have your credit scores hurt or damaged. But what people don't realize is that information that's reported on a credit report has to be 100% accurate, and it has to be verifiable. So when something is being reported on a person's credit report, then there's certain laws and regulations that protect the consumers, and also other consumer rights that protect the consumers from misinformation or disinformation being put on their credit profile, or also the behaviors of creditors or debt collectors. So what we do is we help leverage those laws and regulations and consumer rights to get the things off the credit report that shouldn't be there, or that the collectors or creditors don't legally have the right to report. An example would be a negative account on a credit report that can't be verified or validated. And in a lot of cases, these third-party debt collectors, they may purchase maybe a portfolio of debt and just basically willy-nilly slap stuff on the credit report that may not be accurate, or that they can't verify. So if it's something that's put on a credit report that could have a wrong balance on there. It could have wrong payment history on there. It could also be information that's outdated. So once this information is challenged, then therein lies violations or something that is contradictory to the laws and the regulation that report stuff that's being that regulates the stuff that's being reported on the credit report. In particular, the FCRA, which is the Fair Credit Reporting Act, which regulate information that's reported on the credit report. The Fair Debt Collection Practices Act, that regulates the behavior of the creditors on the way that they collect, their collection practices. Say, for instance, they can't, call you all types of times of night, attempting to collect the debt. They can't call relatives or call your jobs and things like that. And once you tell them that that you don't want them to call you, that you want the information to be sent in writing through the mail, then they can no longer call you. So we help leverage those to help get the stuff off the credit report. So what it looks like for new clients coming in, the first thing we do when a client approaches us, typically if it's someone that's been referred to us, if it's someone that's found us online or through our social platforms, is that we offer a free consultation. We basically want to establish what the person's goals are, because that's the thing. It's really not always about the credit. It's really about trying to use that credit to achieve an end goal. So we identify what their goals are. We we educate them. We take them through an education process to let them know basically what the credit consists of, the ranges on the credit scores, and things of that nature that they may not necessarily be familiar with, and really to kind of empower them to understand how the credit system works. After we are able to do that, then we take a look at their credit profile. We identify the things that's negatively impacting their credit. We establish exactly where their credit score needs to be in order to reach those goals. And then as we're doing that, we do the intake process. We set up their file. We set them up in our platform to where they would have access to be able to log on to their file as we're working on their credit, and they can track their progress. Yeah, so once we identify something that's on their credit report, then we do have the ability to challenge that information that's being reported on the credit report. So especially if we identify something that's a violation. If it's something that's a violation that's being reported on their credit report, for instance, if it's a wrong date of last report, or if it's the wrong amount on the credit report, or if it's in cases a duplicate account. Let's say if it's a negative account that's reporting on the credit report twice, then that's something that is a identifiable violation that can be challenged. And at that point, the creditors have no choice but to either remove it from the credit report, or they can go through litigation. And we do partner with, we have legal partners, attorneys that we partner with. So if we identify something that is a violation, then we can bring in the legal partners and then refer them over to the attorneys to push litigation, which in some cases, it may result in the, number one, the debt getting erased, removed, points getting restored back. And it's not uncommon for our clients to receive settlements because of the violations that we've identified and the attorneys that have gone to work from them and push the litigation. The biggest amount that I've been able to get deleted from a credit report, and I remember it specifically, is a $77,000 second mortgage, $77,000 second mortgage that we were able to get wiped off of someone's credit report, and that was in a relatively short amount of time. It was within, I think, in about 60 days, we were able to get that account that was negatively reporting on our client's credit profile. And it was because of a technicality. There was a wrong, incorrect balance that was being reported on the credit report. We immediately filed a complaint to the Consumer Financial Protection Bureau. They did their investigation, and within 2 months, that account was erased, deleted, and basically never came back. So that was a pretty happy client on that day. So there are a lot of bad actors out there when it comes to credit repair companies. Some of them maybe not intentionally, but what happens is that you got a lot of because there's a low barrier of entry. There's a low barrier of entrance to this business. A lot of people think that they can just jump into the credit repair business, set up, and they're going to make a lot of money and not have to worry about anything. But what happens is that if you don't understand what you're doing, then a lot of times it can feel scamish and people feel like they're being scammed. which may not necessarily be the case. They may just be working with a credit repair company that doesn't thoroughly understand the laws and the regulations in order to not only empower their clients, but to understand themselves how to escalate those disputes and use those consumer rights and laws to leverage them to get the things off of a credit report. Another thing that we run into a lot is these people that have worked with or approached or worked with these debt settlement companies, which in my opinion, those companies can do a lot more damage than good. And there's a big distinction between a credit repair company and a debt settlement company. Typically, a debt settlement company advises their clients to stop making payments on their credit reports, which on their accounts, which in turn does more and more damage to the credit report. And then what happens, they sort of they may be doing more harm than good because you're kicking that statute of limitations on the timeline, which these accounts can stay on your credit report. You're kind of kicking that down the road. For instance, if you have an account that you've had about 6 years in collection, and the statute of limitations in which it comes off your credit report, it's in 5 years, but that clock starts ticking on the date of the last payment. So if you get into a payment arrangements after 5 years on this credit accounts, in which these debt settlement companies advise you to do, then yes, you may agree to settle on that account. But if you don't get the creditor to agree to take it off the credit report, then it's just going to show a balance that's paid less than the original amount, and it's going to extend the amount of time that that account can stay on a credit report. So you have to be really careful when you're dealing with those types of situations, because you could be doing more damage than good to your credit score. A debt settlement company. So the difference between a debt settlement company and a credit repair company, a legitimate credit repair company, is that a debt settlement company, they come in and they negotiate with the creditors or debt collectors an amount less than the full balance that the client has to pay in order to get the accounts settled to where it's no longer showing a balance on the credit report. But the issue with that is that it doesn't necessarily help the credit score, because yes, it'll show that the amount has been paid, you've settled on that amount, but that collection or that charge-off account is still going to report on the credit report for at least 7 years. And again, the 7 years is going to start on the date of the last payment. So whatever date that you settled on that account, then that's going to start that's where the 7 years is going to begin, and 7 years from that account. Now, what my company, a company like mine specializes in is not necessarily negotiating, but really leveraging your consumer rights and the laws and the regulation to get the things deleted or removed from your credit report. And then once we identify those, which is very common to find those either violations or oversights on things like that can be leveraged to get the stuff taken off the credit report. And we leverage that to help get it removed or deleted. And then that way, not only is the debt gone and erased, but then your points are getting restored back on your credit score. So now your points rise, and then there's the debt is gone, and you're more so on your way to recovering. Yeah. So sometimes I guess credit repair is not always the right solution for some people. Some folks that are just basically underwater in debt, then that would be more of a something I would say more of a credit counselor, where it comes in and sort of helps you put a plan together and a budget, and really just kind of start chipping away at your debt and getting that out. Not necessarily advising you to stop making payments, but they may negotiate with your creditors on a reduced minimum amount to something that you can afford until you're able to reduce that amount gradually, or get in a position to where you can afford to make more payments, additional payments down the road, but not necessarily have it impact your credit while you're making those payments that are less than the minimum until your financial situation improves. Yes, we do get a lot of people that come to us in that situation where they're underwater with their credit, and they may not be a good fit. Typically, the ideal clients that work with us are people who've already experienced those failures or adverse accounts on their credit report. They've gone into collections, and then we help them out of that situation. So when those accounts are in collections, then we can come in and really dispute and challenge it. And that's when most creditors are willing to negotiate, and that's when most of the rights, consumer rights, and the laws and regulations can be leveraged to help get it cleaned up. So Credit Repair Florida is a credit service organization established here in Central Florida, which we help clients all over the country. So we have clients nationwide. We've been able to help over 4,000 clients overcome their credit challenges to reach their financial goals. We also help home buying professionals to convert those clients that have credit challenges into closing, or basically getting them the financing that they need. So if you'd like to contact us, our contact information, the phone, you can reach us by phone, 855-940-FICO, or 855-940-3426, which spelled out on the phone is actually FICO. Or you can reach us by email, which is Tim, T-I-M, at Credit Repair of Florida, Florida spelled out. So Tim at creditrepairoflorida.com. And you can reach us through our website, which is creditrepairoflorida.com. We do have clients that come in who consider bankruptcy. And the thing that I say about bankruptcy is that bankruptcy is usually a last resort. If a client has mainly non-secured accounts, I would say bankruptcy probably wouldn't be the best option. Now, let me qualify by saying that I am not an attorney, and please don't take any of this as legal advice. However, my opinion on bankruptcy, if it's non-secured accounts, then I would say probably, in my opinion, not the best option. Accounts that's not connected to something that could be foreclosed or repoed on. So non-secured accounts, if it's not a home or automobile or something that you really depend on from day to day, then I would say take a very long consideration if you're seeking bankruptcy. Now, I will say you definitely want to seek legal advice on that decision. There's bankruptcy attorneys and things, and if I'm not mistaken, the consultations are usually free. But if it's a matter of, and some people have just a lot of credit card debt, personal loans, and things like that, then I would say think very long and hard before you go down the bankruptcy road, because typically, if those accounts, if they end up, in court, it's usually going to result in some type of glorified payment arrangement that the courts may ask that you negotiate with your creditors, or they will come up with some type of arrangement. There's different types of bankruptcies. So there's I think it's the Chapter 7 bankruptcies that just basically wipes out all your debt. And then there's Chapter 13 bankruptcy, which is more of a glorified payment arrangement, which is usually facilitated through the courts. So those are the things that, if you're thinking about that you want to ask the attorney what your best options are as far as which chapter of bankruptcy that you want to seek. Absolutely. So how I got into this business was basically really from my own misfortunes and my own dealings with my personal credit. So, and I understand personally how much of a tough situation it is to have bad credit. So, I mean, it can be really a embarrassing, not only an embarrassing situation, but it can basically handcuffed you. There's so much that depends on your personal credit. So when people come to us, they are really looking for solutions. And a lot of times they are in a tough, almost sometimes a desperate situation. And the thing that we pride ourselves in is to make sure that everyone gets the same professional experience and one of the highest levels of expertise that you can find when you're dealing with a company such as ours. We have me and my team, which I have a team, we have in excess of over 20 years of experience helping people overcome their credit challenges. So we basically, we bring them in, we empower them, we educate them first on how the credit system works. We tell them exactly what we're going to do. We give them a timeline on what they should expect as far as reaching their goals. And it's a realistic timeline. We don't make any false promises. We don't overpromise. We are realistic in what we show them and what we set out to do as we reach their goals. And we also make sure that we're completely transparent. So we call them every 30 days as we're working on their credit. They're able to log on into the portal and track their progress as we're working on their credit. And we also communicate through email and send them like a progress report, almost like a report card, to show them exactly how they're doing and how they're progressing along through the program. We answer the phone. So anyone who calls, I answer the phone personally on weekends. I have my team. We answer the phones usually during normal business hours from 9 to 7 p.m. You can get someone answering the phones when they call. So we'll make sure that we're there. We're sort of, holding their hands and walking them through the process and helping them understand exactly what's going on and how we're able to achieve the things that we do. Now, a lot of it depends on the client as well. They have to be fully engaged in the process in order for us to be successful. So there's things that they may have to do, such as making sure that they're not missing any payments, making sure that they're getting their balances paid down, making sure that any correspondence that's coming through the mail from creditors or debt collectors are getting to us so we can evaluate it and build a case in that situation, or escalating their files for them as well. So it's definitely a team effort. So we make sure that we work alongside of our clients, and we empower them, and we work together in order to achieve the goal. So the thing about working with us at Credit Repair Florida, we understand what our clients are going through. We've been there. We understand that the embarrassment that comes along with having bad credit, not being able to achieve the things that you need to do with your personal credit. So when you come to us, we understand the pain, the embarrassment, just the challenges that you're facing. So we make sure that we make sure that we put that extra effort in. We make sure that we walk you through exactly the steps that it's going to take to get you where you need to be, and that there's nothing to be embarrassed about. There's nothing to be ashamed about. It is a judgment-free zone. We've all been through it. A lot of people experience it, and it's not always the client's fault, but we do want you to understand that there's laws, there's regulations, and you have consumer rights in order to challenge that information and to help dig yourself out of that situation. So until you understand what those laws and those rights and the next steps in order to start working your way back out of it, and that starting point to getting back to where you were before and reaching those goals, then we want to make sure that we're there and to let you know that not only have we been through it, but we've been able to successfully help a lot of people that's been in that same exact situation as the clients that are coming to us for help. Again, I am Tim Sanders with Credit Repair Florida, Certified Credit Counselor. You can get in touch with me by phone. Give us a call at 855-940-3426, 855-940-FICO, 3426, or reach out to us via email, tim@creditrepairoflorida, Florida spelled out, tim@creditrepairoflorida.com, or visit our website at creditrepairoflorida.com.